Well, there's a lot of important questions there. As a technical matter, I think it's hard to evaluate whether Sri Lanka should differentiate in a future debt servicing crunch between bondholders and bilateral creditors, Japan, India, and China being the most important of them, because we don't actually know the terms, the actual financial terms of the restructuring of the bilateral debts. That has been kept secret. There, we can guess. The IMF has said that the terms are consistent with the debt servicing agreement, but we don't actually know the details. In general, I think the bondholders would feel that if they were not being paid and China was being paid, or if they weren't being paid and India was being paid, that there was a differential in treatment that would create difficulties going forward. So my general belief is that in most circumstances, if you end up on default on the external bonds, you're going to end up in a situation where almost all the external debt needs to be renegotiated and reconsidered, because it was all part of an agreement based on this current debt sustainability analysis that allows everyone, not just the private bondholders, to get a relatively generous deal. I guess the second point I would make is that, on some measures, Sri Lanka's economy has been performing pretty well recently. The exchange rate has appreciated, GDP is growing. The GDP, dollar GDP is above what the IMF forecast, which makes it a bit more challenging to start over. Not impossible, but a little bit more challenging to start over. But this outperformance has come when Sri Lanka has been paying nothing to any of its external creditors. And what we don't know is whether that performance can continue when Sri Lanka starts paying a little bit, as it will if these deals are completed. And we certainly don't know if that performance can continue once Sri Lanka has to pay a lot on its external debt when the IMF program ends. My concern has always been that economic performance during the program period, when debt payments are quite low, would not accurately forecast performance outside the program payment period when payments go way up and Sri Lanka faces a very real risk of redefault. I personally think it would be eminently reasonable, given the exceptionally high risk that this particular deal creates of a default in 29, 30, 31, 32, for a new government to come in and seek a set of terms consistent with this debt sustainability framework or with a new one, but with an added criteria imposed by the government that seek to reduce that risk. If the goal of Sri Lanka is to be one and done, to not be in a position of repeat defaults, you need restructuring terms that create that possibility. And I don't think those restructuring terms are what is going to emerge from the current restructuring. To be clear, many governments, particularly new governments, do renegotiate with the IMF. You can renegotiate how much you're willing to do, your fiscal adjustment. But the debt sustainability analysis is only partially a function of what you are willing to do. It is also a function of the IMF's evaluation of your structural criteria. And unless the IMF reevaluates those structural criteria, the new debt service sustainability analysis may look shockingly like the current one. If I were the Sri Lankan government, though, I would insist that a future debt sustainability analysis cover variables that were omitted in the past debt sustainability analysis, cover variables like interest payments relative to revenue, debt service relative to revenue, the total stock of external debt, And using those new criteria, put an overlay that is a bit more constraining on the outcomes. But look, that is one of the most consequential decisions a government can make. There is effectively a deal. I mean, the IMF and the Paris Club creditors haven't signed off on the macro linkage of the new bonds, but they've signed off on the base bond. So Sri Lanka would be effectively tearing up a deal that its current government has negotiated and gotten agreement with its creditors and saying, we want a better deal. Some creditors would view that as akin to a default. So it is a consequential decision, very, very consequential decision. My last point is that I don't think the IMF should have put Sri Lanka in this position. I don't think the IMF should have ever put forward a debt sustainability analysis that allowed such a high level of debt to GDP at the end of the program. I don't think the IMF should ever have put forward a debt sustainability analysis that suggested Sri Lanka, with much less revenue, and that's the one place where the current program is not performing well. Revenue to GDP in the last staff review is still close to 10%. A lot of adjustments still there to happen. That a country with that little revenue shouldn't be expected to pay much more debt service than comparable countries. So I think there's some real responsibility that goes on the shoulders of the IMF, but that is not to downplay the consequences of trying to undo the program and undo the debt sustainability analysis and undo the debt restructuring. Changing that is a hard haul, one that would require real political consensus inside Sri Lanka, because it would put Sri Lanka at odds with much of the international community for a while.